Om Lokaha Samastaha Suki no Bhavantu. May all beings be happy and peaceful. Hi everyone, happy Friday. It's Phoenix. Welcome to my channel for those of you that are joining for the first time. Today we're going to talk about Bitcoin and this very interesting $2 million bet that Balaji has made that Bitcoin will reach $1 million in 90 days, and that was on March 17th. So 90 days from March 17th. I want to actually approach this not only from a technical standpoint, but also looking at on-chain data. And of course, I want to break down his argument and also look at some counter arguments as to why this may not happen. Now, the reason that I'm doing this today in live format is because, well, it's fun to do lives, but because I think that Balaji is a very interesting personality, and he was not necessarily a Bitcoin maxi until actually very recently. And he made some really good calls in the past. And one in particular that I want to share with you was back in as the pandemic was unfolding. This was on January 30th of 2020. What if the coronavirus is the pandemic that public health people have been warning about for years? It would create border closures, nationalism, social isolation, remote work, face masks, distrust in governments, all of the above. This was before everything took a nosedive, okay? This was well before. He was sounding the alarms. And now he's calling himself the Paul Revere, saying the printers are coming, they are going to print en masse. And there are going to be implications for that potentially. So many people have been saying to me, well, you've been bearish all this time. Why are you suddenly bullish? I'm not bullish. I'm not bullish or bearish. I'm trying to present different perspectives because it is helpful as a trader to be as neutral as possible in all of this. But I will say that things have definitely changed significantly since we've seen the collapse of what, 3-4 major banks now. This could be just the very beginning. And technically, we are going to start there. So let's start out and take a look at Bitcoin. And we have seen a 67% increase since the first of the year for Bitcoin. Now, if you compare that to the S&P 500, that's about 4.77% as of today since the beginning of the year for SPY. For the NASDAQ, that's about 18.5%. So Bitcoin has outperformed. Now, has it decorrelated? Not necessarily, not yet. It's too soon to tell. But this is a very interesting sign because it is also coming at a time when we're seeing a lot of chaos in traditional finance. And remember that Bitcoin was designed for this. So this is the ultimate test for Bitcoin. This came about as a reaction to what was happening in 2008. And ironically, I don't know if for those of you astrology buffs out there, we just Pluto moved into Aquarius on the 23rd, I believe. And so this is all around shifting in old structures, okay, bringing in the new. And so also from a technical perspective, just bringing in the EMAs now, just completely zoomed out on the weekly, let's look and see the 200 weekly moving average. Okay, we were below this moving average for quite some time, which was a first for Bitcoin because the last time this happened was in COVID, but it was very briefly. And now we have spiked back above it, okay? This was a very large weekly candle, one of the largest weekly candles that Bitcoin has seen. And when did it happen? It happened at the break of this potential accumulation phase. Now, normally, I would expect a deviation here as per the Wyckoff method, okay? And that was what I was sort of hinting at for many weeks as it was starting to approach the height of the range. But again, things are changing rapidly. We need to be willing to pivot according to what's happening in the world. So fundamentals are important too. So now let's take a look and see, let's compare this to one of the schematics for the Wyckoff method. Let's look at this one because we didn't get a spring. So you see here, okay, we can identify very clearly. It's always a little tricky to get these together. You can identify here, we have the selling climax. You could say that was here, okay? We have the automatic reaction. You could say that was here. Secondary test, okay? There was one here. okay? And then there was also some here. This was a deviation back inside the range, pushed all the way back up to the top. Potentially these are lower points of support here, okay? And then you have show of strength. We just maybe saw the show of strength here, okay? Now, this could technically still be a deviation, but the reason I would actually err against that is because usually when you see deviations during accumulation phases, at least in my own personal experience, they don't deviate that far above for that long, okay? Usually it's a quick sort of run, or there's not a whole lot of strength above that, as we saw here, okay? So is it a deviation? Not really sure yet, but we could be heading out of accumulation. We could have already decisively broken accumulation. If we look at the 50 moving average here, this is the first time. There's so much going on this chart now. I want to hide it without deleting it. Okay, so you can see we are above the 50-week moving average as well, okay, for the first time since the initiation of the bear market here. I mean, this was a very brief phase here, but decisively above this point. So technically speaking, this could be the entrance into what many would consider a bull market. Now, I am saying that we should be bracing ourselves for a whole lot of volatility throughout the remainder of this year. Now, if we look also here, we can see some similarities as far as, interestingly enough here, we didn't break above the 50-week moving average until after this major break here. This was a very clear break in the accumulation. You see this very large weekly candle, and then we have some weekly candles, some dojis, where it is consolidating, it is holding before the next move up. And so that's actually occurring right now with Bitcoin so far, okay? So we haven't seen yet. Time will tell whether it pulls back to $25,200. Not really sure yet, but if it does pull back and it starts to show some strength here, that's going to give some credence to Balaji's argument, okay? If it pulls back inside the range, then there's a much lower probability that Bitcoin could reach $1 million. Now, I'm not going to give you my take on the $1 million argument until the end of this video. I'm presenting both sides of this from many different angles. So from a technical standpoint, Bitcoin may have just broken out of accumulation and it may continue to the upside. Now, there is going to be some immediate resistance between $28,000 and between $28,000 to $32,000. That's going to be strong resistance for Bitcoin. But if it breaks through, maybe it breaks into this range and starts to consolidate here, even more strength. So the longer Bitcoin is able to hold above 25,200, the more I would be leaning towards much more upside. Now, exactly how much upside is uncertain as of right now, but if what we've seen so far this year is any indication, it could be a lot more, and it can happen very, very quickly, as Balaji clearly elucidates. He gives many references, he gives many charts, and we are going to go through that in a moment here. But one thing that's also very interesting is the on-chain analysis. Now, I'm not an on-chain analyst. I don't really look at it that often, but I am noticing, I am sort of on board with Will Clemente and Willy Woo and some of the others saying that, listen, the supply held by entities with less than 10 BTC is steadily increasing. Okay, not only that, but we have the percent of supply last active 2 years ago. So less supply, less and less supply. It's moving off the exchanges. As a matter of fact, only about 12% of Bitcoin in circulation is currently on exchanges. And in the last 30 days, exchanges saw the largest amount of outflows of Bitcoin ever. Okay. And so what happens when we have a supply shock? That can dramatically increase the price. So this is something to be considering. Okay. Also, we have BTC addresses with non-zero balance, meaning that what's happening is it's actually not the larger whales that are buying here. It is predominantly the small shrimp, okay? And you can see the spike here. This was actually the last time we saw this was back in the beginning of the previous bull market, okay? So on-chain data is supporting, there's some confluence with the technical perspective, okay? Now let's take a look and see what Balaji has to say. and he says that he's making a bet. It's $2 million. Term is 90 days, and they have a custodian, so it's a legit deal. He's saying the bankers lie. This is really, really good to read. Read all the way through it. I linked to it in the chat. And he's saying they're basically admitting their insolvency, the banks, in footnotes, right? And so those that are actually paying attention, which is very few people, were hip to this. But it's just like SBF. It's no different than SBF, except that they used the depositors' money to buy treasury bills. And then, of course, the Fed completely lied to the banks and did what they said they weren't going to do. And that's sort of been par for the course of the last couple of years. And he's basically speculating about why Powell delayed on the rate hikes. They said they weren't going to. Yeah, so that doesn't really matter at this point because it's all been said and done. So, but if you look at these graphs here, this is very alarming because this is the first time we're seeing not only the Federal Reserve weekly remittances to the Treasury are decreasing, and you can see a steady increase for so many years, and then we have this sharp decline here, but also unrealized gains, losses on investment securities dropping. Okay, so they're all bankrupt and they're hiding it right now, and this is likely going to lead to massive QE. Okay, a lot of printing, and not just to the tune of $700 billion, which is what we saw back in 2008. But actually, 2008, that problem was never really solved, okay? And so now it's just compounded over all of these years. And so it could be to the tune of $17 trillion. And what that will do, what's that going to do? It's going to hyperinflate the US dollar, okay? And in the meantime, while that's happening, we've seen what happens during hyperinflation, okay? We've seen how certain countries, and this chart is really interesting. You can see the hyperinflation table, how long it takes for prices to double. In Hungary, it was 15 hours. On average, it's about 1 to 2 weeks for prices of everything to double. And this is going throughout history, all the countries that have experienced periods of hyperinflation and what that does to the currency. And so during that time, are people going to want to be holding the US dollar if it does hyperinflate? And the answer is obviously no. And what are they going to want to hold? Could be Bitcoin. And so he uses the term hyper Bitcoinization. So everyone's rushing into Bitcoin, and this is already happening. Actually, I would argue that this is what, when we see this price action that's unfolding here, it's actually not CZ that's buying all the Bitcoin, contrary to popular belief, because if we look at the market cap of Bitcoin, you could say that, okay, it's about $537 billion right now, which really isn't that much. It's a drop in the bucket compared to most global asset classes, okay? We have the entire crypto market cap is just over $1 trillion right now, I believe. Total market cap is $1.12 trillion. That's about what, 130 something the market cap of the stock market, which is about $40 trillion. Okay, so it's not that difficult to move it, but $1 billion will only move it about 2% overall. Okay, and since the announcement from CZ that was on sometime mid-March, it's increased more than 27%. So it's a very small amount. It's not CZ buying using the BUSD reserves, okay? So let's just get that out of the way. It's actually smaller entities that are buying. And there have also been less deposits. Last week, I think it was $50 billion less deposits into banks. People aren't trusting the banks. Now, I was at the gym today. Just want to give you a little anecdote here, if that's how you pronounce it. It's such a weird word, isn't it? I was at the gym today and there were some cracks in the mirror, and the girl mentioned it. She said, you know, people said it was never there, but it was always there. And I said, yeah, it was there. But what happened was that crack just got a lot bigger. And it hit me that most of us that are here, those of you that are here watching this right now, realize that the cracks have been there all this time. But other people are going to come in and say, you know, we didn't see this coming. We didn't see it. Now they see this big, the whole mirror is screwed up now, but they didn't see how it all started. And you're seeing this, and those that are seeing this right now, there's sort of a branching that's happening right now. People are taking their money out of the banks and they're putting it into Bitcoin, and it is happening. And this is what Bitcoin was designed for. And we have to pay attention and not just focus on what has happened in the past, because these are unprecedented times. And so as a trader, I'm not going to say that this is going to follow the proper Wyckoff schematic here. Typically, accumulation would be longer. If we go based off of the previous bear markets, then we would basically have to say, okay, if I were timing this according to the 2018 bear market, that would be actually April 7th was when it broke through. So if I go by the number of days from one bear market to the next, April 7th would be the break in accumulation. So it happened a little bit sooner than that, if that is the case. July 9th would be somewhere in the middle between these two bear markets. So this bear market was a 2015 bear market. October 10th would be the break in accumulation, okay? The fourth halving is coming up June of 2024. And as we know, if you follow the halving cycles, usually in the months preceding the halving, Bitcoin does tend to rise dramatically, and also after the halving. So this is a period to watch out for. So it is a little bit early if we go based on the previous two bear markets, but this doesn't necessarily mean that it has to be this way. It's just that we're going off of what we've seen in the past and trying to come up with the most sensible conclusions using the data that we have available to us. Okay, so bear market could be over. Accumulation could be over. It's possible that we don't revisit this range again. It will be interesting if we come back down to 25,200, if it's able to hold at this level, okay? This is a critical level. As I mentioned before, this has always been a critical level for Bitcoin. If it can hold and start to break back to the upside, for me personally, I'm going to be accumulating a whole lot of Bitcoin, okay? I was accumulating at 16,800. Unfortunately for me, I sold a lot of that way too soon, okay? That's the way it goes sometimes. And that's why there's the argument for dollar cost averaging, which can work for or against you depending on the situation. In this situation, those that were just buying all throughout, they're doing really well right now. So good on you if you've done that. I'm curious to hear your thoughts. I'm going to need to take a mental break for a moment and see what you guys have to say about all of this. What's standing out to you in these arguments? I'm going to present the other side of it in a moment. What do you guys think? Do you think Balaji's full of it? Do you think he's absolutely crazy, bonkers? Or is there some truth to it? Or maybe because he knows the power of Twitter and how essentially we're seeing digital bank runs right now. This is unprecedented, how a bank can literally go completely just belly up because of something somebody said on Twitter. It could also have the reverse effect on Bitcoin, couldn't it? We haven't explored this. This is uncharted territory here. No chance that Bitcoin goes to 1 million this year. So basically, in order for Bitcoin to go to $1 million, it would have to 36x from here. Okay. And so that would also mean that the market cap would have to be 19.2, I think, $19 trillion. Okay. So that's actually still only half what the stock market's market cap is, which, I mean, we're talking about a global asset class. And I think that gold has, what, an $11 trillion market cap. So it's possible, right? I don't want to say it's impossible, but I would say, well, again, I'm not gonna give my opinion on this yet. I want to hear more from you guys, what you guys think. Think he's grandstanding? Well, it could be that, he does own a lot of Bitcoin. And it could be that many are saying, well, the maxis, they just want to be able to sell higher. But most of the maxis aren't planning to sell. They're planning to use this as a currency in the future. They're saying, well, if you hold on to it long enough, you won't have to sell it. Okay. So hi, Jason and 𝐬𝐭𝐲 and Darcy. Thanks for sharing your opinions. Yeah, it's been very confusing in 2023, and being on the sidelines, it's nothing, it's nothing, nothing against that really. And Benjamin Cohen saying the Bears and the Bulls will get wrecked this year. Both of them. Is that what he's saying? Both the Bulls and the Bears? I watched his videos occasionally. He's always been very level headed. I think that personally, I think again, a lot of volatility means sharp moves to the upside and the downside. And this is why I've been sort of training you all to start to catch breakouts. Because if you catch a breakout, and actually one just looks like it just happened while I was live here, then we start to see the momentum to the downside. We start to see the momentum and we catch that at a critical level. See, now right here where this is right now, this is a no trade zone for me because it's just really choppy. But if you see, if you notice here, and also being prepared for liquidity games, market jitters, understand that, yeah, look, now it's really dropping. Okay. So interesting, we have these 5-minute candles, sometimes a 1-minute or 3-minute candle, and the price can just really move. Okay, this was actually a 1-minute candle here when it, after the breakdown here. If I really break this down and look on the lower time frames, you will find that, and it's tricky to track this, right? This was a 1-minute candle for Bitcoin, this breakout. So was it easy to catch it? No. Is it possible? Yes, if you're paying really close attention and you have alerts set at critical levels. Okay, so that's my strategy as a trader. Of course, this is not the focus of today's video, but just taking a break from the Balaji craziness. I think actually it's a good thing that, I mean, he is literally putting himself on the line here. He's putting $2 million into this bet. It could be good. It could be really good for cryptocurrency, get more attention into it. People are saying, well, it's not retail that's buying, but on-chain analysis is not supporting that. And the other thing to understand is that once more and more people start buying, as we know, eventually the institutions, the firms, they have to buy too, because they have to hedge themselves. And then small countries start buying. And when the countries start buying, then it becomes sort of a Hunger Games. It's like, I need to have it. We need to have this no matter what. And I think that it could be already the case that countries are buying in secret and we don't know about it yet. But expecting more volatility for sure. This is obviously a level of resistance. And if I bring up these macro levels for Bitcoin, I know this looks a little bit messy, but it's actually very accurate. I'm going to turn the log chart off and we'll look at this from a daily perspective. This is a pretty critical mid level here, this 28,200. And you can see the range. I drew these based off of the high from the previous bull market, sorry, the 2017 bull market to the 2018 bear market, the high to the low, and then you find the mid, and then you copy and paste and all the way up here, okay? And you notice that these levels are pretty solid, okay? As far as just looking to give some macro context, of course, there's gonna be initial resistance here and more likely headed to the downside. And we're seeing it move as I'm making this video right now. Again, this is the critical level. This is the range we're watching right now between 25K and 32K. Now, if we see more consolidation, if we see the buyers continue to step in and purchase and buy Bitcoin and continue to keep it in this range here, or even in this range here, as long as it's above here, still got to favor the more upside for Bitcoin. And that's, you know, that's not really hopium on my part because I don't personally have any spot Bitcoin. So I have a rather unique perspective. I don't have spot. So if it goes up to 32K, then I missed the opportunity to buy all the way down here, or I sold too soon on the Bitcoin that I purchased sub 17K. That's the way it goes. I focus mostly on keeping a bunch in stables, but that strategy could shift too, especially now we have very interesting coincidence that the White House filed their economic report, which basically spent 36 pages trashing Bitcoin and cryptocurrency in general. And also, we have the SEC issuing warnings to investors right now. And we have the SEC issuing Wells notice to Coinbase. And we have their lawsuit against Justin Sun. And all of this is coming to a head right now. Now, why is that? Was this all planned? Why are the crypto banks the first to be targeted? There's some consolidation going on in the banking system. There's talk about the Fed Reserve, the Fed Now payment system, which will lead into CBDCs, and they're planning on releasing that in July. And so Balaji's argument is, look, we have a limited window here. They're hurting the US dollar. They're hurting people into the larger banks, and then they're going to lock it down, control everything that you spend. I'm not completely adverse to what he's saying. I don't think he's a conspiracy theorist. Again, he predicted everything that was going to happen in COVID months before it happened. Okay. And so I wouldn't completely discount him, but I also would say that it's possible, it's maybe more possible that this is more drawn out, that this takes longer than just a couple of months. But then again, you just never know how quickly these things can shift, just as we saw with the chart for hyperinflation, how quickly that happens. And when people want to move money around in this digital age, it's not all that difficult. It's not all that difficult right now to buy Bitcoin, to take money out of your bank and buy Bitcoin. Now, they are making that increasingly difficult, and it could get worse for those of us in the United States. And I'm actually taking some of Balaji's advice. Personally, I'm actually planning to leave the United States this summer, and possibly permanently. It's complicated, but I'm looking into other jurisdictions where I can continue to do what I do. Because, if you don't have the tools to do your trade, then you have to set up shop elsewhere. And that's sort of the reality that I'm facing right now. I don't know. I'm curious to hear what some of you are doing, because I know that there are some other serious traders in here and investors as well. Of course, holding Bitcoin, self-custodying it makes sense. If I wasn't certain about the future of USDT, USDC, and I just wanted to be done with it, is purchasing Bitcoin right now such a bad idea? I mean, even if it did drop down back below, put in new lows, eventually could really rocket at some point. It seems like it's not a matter of if, but a matter of when that's going to happen. Now, many people would argue that the coronavirus was a perfect example of how, well, look at what Bitcoin did during the coronavirus. It completely crashed. It took a nosedive. And so just because Bitcoin might protect from certain economic risks, it's not going to protect from a systemic risk. Okay, so a systemic risk would be something that's more large scale, more global, some sort of a black swan event. But actually, it seems counterintuitive. But again, go back to read the white paper for Bitcoin. Why was Bitcoin created in the first place? To solve this problem. So it really comes down to how people react to the bank failures, to this massive consolidation that's happening, to the lies that the Fed continues to feed us. Are they going to continue to go along with what they're saying, just like they did during COVID? I mean, I don't give a whole lot of credit to the masses after what we experienced in COVID and how people responded. Now, there's always some outliers, and I'm sure those of you that are watching this have mostly been against a lot of the regulations or whatever that they've imposed in your country. But most people kind of went along with it like sheep. And so it's hard to say, but there is definitely a split that's happening right now. There's those that are investing heavily in Bitcoin and those that are continuing to keep their money in the bank. And most of those people are pretty oblivious to what's happening in the world right now. So the rest of crypto, what's the rest of crypto going to do? I'm also noticing that ETH BTC is really down right now. It's been really dropping for the last week or more. which is part of its normal trend. But also Bitcoin dominance is something else that we should look at here, because Bitcoin dominance was low for a long time and actually has been in this range here. And it will be really interesting to see if it does convincingly break out of this range that it's been in. This is actually since May of 2021. Okay, so if it breaks out of this range, this is a level I'm actually going to set an alert here, because I'm curious when this does happen, what's going to happen to the alts. I suspect, and I'm actually trading alts less and less, in part due to the lack of liquidity, but I would suspect that many people are going to start selling their alts off into Bitcoin. And it just makes sense. And especially as the SEC is just constantly breathing down the neck of pretty much every cryptocurrency, Bitcoin seems to be the safe haven. Ethereum could continue to hold strong. We don't know for sure. But altcoins, I don't know, man. For me personally, I do have some altcoins. Actually, I'm waiting for an unlock. It happens in like 3 hours. It's a pretty big unlock. And I'm going to instantly sell those altcoins. I'm going to sell them, because I would rather actually own Bitcoin or have stable coins right now than have any kind of other cryptocurrency. And that has also shifted in the past couple of months. I wrote the small cap superstars report back in December. A lot of those did really rocket. I do think that alts will likely revisit their yearly open. I could be wrong. I don't really know for sure, because we don't know how alts are going to react if Bitcoin really rockets. They could go along with it for a while, but then again, we're facing the threat of regulation on a daily basis. And even though not every country is going to necessarily be affected by this in the same way, it's still the US, a large majority of investors in cryptocurrency are in the West. Okay. And so Western nations are they're going to sort of follow suit, whatever the US does. And I definitely don't agree with how the US is handling cryptocurrency. And that's part of the reason that I'm leaving. But that's what we're up against right now. So there's a lot going on. And the best thing for me right now is to try to stay calm through it all and try to stay as objective as possible and try to entertain both angles. Yesterday, I was listening to Balaji like all day, and I started to freak out because I'm like, man, this could happen like tomorrow. It could happen next week. Yeah, it could. But we need to just sit with what's in front of us right now. And right now, just from a technical perspective, Bitcoin is at technical resistance. We just have to play the ranges and see. But I have shifted in the past couple of weeks into, especially in the last week or so after the whole issue with the banks, shifted into, okay, now it's time to potentially start accumulating, and I would lean more towards Bitcoin. Whereas before I would lean towards a basket of alts and Ethereum, now I'm thinking, Bitcoin could really be the way. And maybe I'm just becoming a maxi. Maybe that's part of the progression, that eventually you just become a maxi because you realize how absurd the whole thing is. I don't really know. I mean, I'm not on the level of Max Keiser, but he wasn't wrong, and they're doing some pretty interesting things in El Salvador. So I'm just trying to be really open-minded and expansive in my thinking. And that's also why I'm sharing this more on YouTube than on Twitter. What I'm finding is just a general closed-mindedness. People have this, they're on one side or the other. And it's like there's this division. But that's the whole point. That's what they want right now, is for us to be divided and against one another. And I would just say, hey, try to take a step back. Try not to criticize or judge others for their views. I'm definitely guilty from time to time, people making absurd predictions, but Balaji, I'm not really going to discount him. I personally don't think that Bitcoin will reach $1 million in 3 months, but it might go a lot higher than people expect. Even if it went to 100K, I think a whole lot of us would be pretty happy. Even if it went to 100K. I mean, the end game in all of this is the whole reason we all got into cryptocurrency in the first place was because we believed in it as a replacement to the existing financial system, right? So we should all be rooting for Bitcoin ultimately. I'm not I do not want it to necessarily go back down unless I had my own personal, unless I'm thinking I just want to accumulate down at 14K because I'll make the most money. Actually, I'd be perfectly happy if it shot to 100K, and hopefully I catch a bulk of that move up. Maybe I do, maybe I don't, but I would be happy if it went to 100K in the next couple of weeks or in the next couple of months, because that would start to bring about that shift that is much needed, and it would start to wake more people up to the fact that we have been lied to for all of these years, and that the Fed it needs to be completely dissolved, and the whole system needs to change, and the CBDCs are not going to cut it. That's what we really want, because the alternative is slavery. The alternative is being controlled in every which way. And so once more and more people start to wake up to that reality, I think that that's going to really buffer the price of Bitcoin. I can't say about the other cryptocurrencies. I mean, Ethereum has held pretty strong, considering if we look and see in this bear market, how far down are we with Ethereum right now? 63%. I mean, that's pretty significant. Where's Bitcoin? Only 61%. Okay, so they're similar. They're similar. Ethereum is holding up right now. We'll see. It never revisited these lows here, this $1,000. I don't have a magic crystal ball. I can just play it from one level to the next. And so right now we're just sort of in the mid between this 25,200 and this level 32,300. Okay, and we hit a supply zone. Initially, there is the reaction. Usually, I would say at least 80% of the time, it's going to react and find some immediate resistance. That's just natural. And so, but so far, we've broken out of this range here. And so I would just continue to watch this very closely. So, man, I know I just dropped a lot of information on you all, and hopefully you're getting some value from this. Let me know in the chat, because, to be honest, these days on Twitter, I get a whole lot of criticism. I mean, there's always those of you that support me, but I just said, I commented yesterday, like, hey, maybe I should just start posting my P&L so you guys can shut up and realize that I'm not a LARP, and I'm actually, every time I post something that's interpreted as bearish, people think, well, you're just a bear, you're perma bear. Or I post something that's bullish and they say, oh no, not that. And it's like, well, just be neutral and understand that I'm just trying to paint a picture here and give a framework, give some context. And so the context right now is in favor of potentially more upside in the coming weeks. But that doesn't mean that it can't come down to 25K first. And that will be where we'll see. If it dips back inside and starts to show weakness, then I would say, okay, now I'm definitely in favor of revisiting these range of lows at minimum at 18,600, and then potentially deviating even lower than that. But it's just like every day this is changing. And so it's not an easy job, because you get a lot of criticism, like for things that you said weeks ago that are no longer even relevant. It's like, it's not even relevant. I'm just doing my best to share with you all. So let me know if it's helpful. Give me a like if you're still watching this and you found some value in it. There's 9 of you watching right now. It's like, I'm really giving all that I can right now. And I really do hope that you can make some money in this time. I would say that if you're feeling uncomfortable, that's normal. I feel uncomfortable in these situations because it is highly volatile, but it's also good opportunities to make money if you know what you're doing. And so I'm waiting for consolidations, and then I wait for breakouts of those consolidations. So right here was a perfect example of that. Right here is not really a good example, but I do have an alert set actually not much further down here, because if we see a definitive breakdown beneath this 26,770, then it could be another shorting opportunity. Aggressive shorts have already been in this trade. Some of my mentors have already been in this trade, and good on them. My strategy has shifted. I'm not really trading alts so much anymore. I'm mostly focused on Bitcoin and Ethereum. I'm waiting for consolidations, and then I'm waiting for breakouts, either to the upside or the downside. So here was one example I'm just going to give you, and I'm actually going to put this into a small course, and it will be very affordable, and because I think it's super helpful. Haven't had any big trades with Bitcoin, Ethereum this week, but if we look on the 15-minute chart, go back on the 15-minute chart and find those areas where, okay, what was happening here with Bitcoin? We see this range, this value area is what you'd call it, okay? And then the breakout was very obvious right here, okay? It did dip down below, but you could have taken a long here with a pretty tight stop, and you'd be up. You'd be up quite a bit right now. So for me, actually, I did take a long here. I just got out way too soon. That's been an interesting thing. I get to analyze that as a trader, but I had a 1% stop here. Okay, so this would have been a 8R trade. So you might wait a week or 3-4 days, whatever it is, and then you find that one moment the alert goes off. Without an alert, I wouldn't know what's happening unless I'm staring at the charts all day. Okay, alert goes off, it breaks through with some strength. We get a 15-minute candle. This one didn't, it was a decent sized candle. It wasn't too big. It wasn't too small. The ones that are too big, then you got to be wary because then it could really pull back. But then you've got a minimum 8R here if you held it and trailed your stops. And then you could have continued to hold this trade. Just one trade, 11.5R right there. Okay. And especially if you're sizing up, you've only got a 1% stop. You're risking 1%. You just made 11% on that just because you caught that. Okay. And then the rest of it, you just let it chop, trail your stops. I mean, it's possible. I just want to share that with you. Like, here's another one right here. This was the breakdown. Okay. Not as obvious because this was during, I was watching this as it was happening. This was during FOMC, but then another one here. Okay. But this here, this was tricky because again, that was a 1-minute candle. That most of this candle was actually happened from like here to here. It was a 1-minute candle. So sometimes not so easy to catch it. And then when it is that dramatic, then expect it to maybe not last as long. So you want a longer period of consolidation, and then you want a breakout that's not super obvious. It's obvious enough to where it's maybe 3 to 4 times the size of the candles around it, but it's not so obvious that it just rips up and then crushes back down again, because then you get stopped out, maybe break even, maybe you make a little bit of money off of it. But that's how you have to trade, or at least for me, that's how I trade in highly volatile conditions. And so the thing is about this is that if Bitcoin does really, let's just say that it really does rip, all of a sudden we get the pullback, maybe it pulls back down to 25K and then it pulls back up again. Okay, and right here, there's the breakout, right? And you get in here, you got a 1% stop here. You catch that move, and then it just rockets. And then it continues up 30K, 40K, 50K. And all this time, it was just that one entry. That's all it took. So I'm just priming your mind for this possibility because I do this with myself on a daily basis. And you prime your mind first, you dedicate most of your thinking to this, and even envisioning, okay, my P&L, it's totally green across the board. Even just one trade, I've sized up, and I'm watching my P&L just really rocket along with the price. You could have caught any of these moves, any of these breakouts, and actually I caught 3 of them, but got out too soon. And so that's something I get to fix mentally, but my strategy I know is spot on. And so get practice with these breakouts. Go back test, go look on the 15-minute, look on the 5-minute, highlight the areas, and I'll show you, I'll give you some proof here that I've done this. I do this all the time. If you look, you can see all of these were 5-minute breakouts, okay? And if you zoom in, you'll see them. Of course, we're on the daily now, but all of these were 5 or 15-minute breakouts. The 3, the 5, the 15-minute, look at those candles and see and find those and take a potential trade on it. Measure your stops and see what you could do with it. I mean, this happened in a couple of days. You've got potentially 5, 6 trades happening in a week during a largely choppy environment, just because the price had some time to consolidate, and then we have a breakout either to the upside or the downside. So it's just about learning to see It's about learning to see the patterns. Just like this is what got us this far with cryptocurrency. So if you're new to trading, the more time you study charts, the easier it will be to spot these. Good. I'm so glad it's helpful, Jason. There is a lot of confusion, and the confusion is going to be circulating on crypto Twitter right now. I think there's a good reason why there's not so many people watching what I'm sharing right now. Just people are confused and they don't trust in general. They're not really trusting. And I understand that. Like, I don't expect you to trust me right off the bat. I think that you should apply what I'm saying and see if it works for you. And maybe it does, and maybe it doesn't. But I just have to get beyond the point as a sort of influencer. I have to get beyond that caring really what people think, because at the end of the day, again, I'm just here to trade and make money, and hopefully it's actually of service, and I'm able to benefit others in that through that process of discovery for myself, if that makes sense. And there's going to be a lot of speculation. I mean, you can see it just in the chat, you know, saying it's going to go up a lot, it's going to go down a lot. We don't know. Just say, I don't know. Again, I don't really know. I'm just going off of what I see. I didn't know this morning that Bitcoin was going to do this. With the S&P 500 actually closing in the green today, I didn't know that Bitcoin was going to suddenly drop down to 27,350. I'm actually a little bit relieved that it did. It could use a little bit of a decompression here, or sort of an expansion to the downside, so that I have something to work with. But we see these hour candles. I mean, that's interesting because you see that wick there initially. We'll see how it closes. People would say, well, this is a redistribution. It could be. I would be focused on, let's bring in the opens here. We are beneath the weekly open, but that was pretty high. But this is a range on the lower time frames here. This is a range that we're working with here. So if it breaks down below this level, 26,800, then here's where my alert is, okay? And I want to see it do it with conviction. So maybe it just sort of bleeds out here, and in which case I don't know that I would enter a trade here, but maybe it actually comes down and consolidates. We get what I was talking about here, and then boom, and then trigger, write it down to here. First, take profit level, see what it does. Maybe you're out of the trade, maybe you trail your stops. You've got to be really alert, and you've got to be paying close attention, and most people don't want to do that. I was telling a guy at the gym today, he's asking me about what I do, and I said, you know, I'm pretty much on call 24/7. It doesn't mean that I'm always staring at charts, doesn't mean that I'm up all night, but I'm on call. And so if I set an alert and it goes off and it's 3 a.m., doesn't matter what time it is, I'm up and I'm watching it. And sometimes I still miss the move. Sometimes I'm doing a dance class. I was doing salsa the other day, and one of my alerts went off, but I didn't hear it because I was dancing salsa. And that's how it goes. You can't catch every single move, just like you're not going to ride every wave in the ocean. It just doesn't happen. But if you catch that one good one, even if it's just 1 out of 10, and you ride that for a while, maybe half the time you get stopped out, and then that one time you get that 10R, 15R, something like that, makes up for it, right? So it doesn't always come all at once. It's not always consistent. And this is where a lot of people start to dismiss trading, and they say, well, you're just gambling. Somebody's telling me the other day, you're just a gambler. Nobody's honest and respected as traders. You're just gambling. That's not true. You can be an honest and respectable person and be a trader. I know, because I am one. So, you know, that's the stigma that goes along with it. And I think a lot of people just don't understand it, because they think that it's just like this, some sort of wizardry to most people. Like, and it's a form of it, right? But just like anybody that's like woodworking or crafting instruments, it's a form of wizardry. This is all, we're just making magic with what we're doing. And I'm just trying to really simplify the whole process as best I can, make it really simple. Like, don't get lost in all the indicators. Don't get lost in what everybody else on Twitter is doing. Even like for me, I take breaks. I have my tweet deck, and I'll follow certain people, you know, more than others. But even then, sometimes I just have to tune them all out and just say, you know what, I don't really care what they're doing. because I don't care what altcoin, I don't care about what ARB is doing right now. It's not worth my time. I'm not really interested in scalping right now. So so knowing how to selectively sort of, it's like a sensory deprivation, right? So that you're saving the mental bandwidth for really important times, like when Bitcoin breaks out or breaks down, and that's when you're making your entry and you're really focused on the trade. And the rest of the time, maybe you're relaxing, you're meditating. I'm going to spend a significant amount of time meditating today after this stream, because I just really need that mental reset, and just knowing how to find the balance and be zen in the midst of all of it. And I think that's how you stay sustainable as a trader. I noticed that a lot of traders in my group, they'll go into sort of, they'll go through phases or cycles where they'll trade a lot. And I actually see this because I can see, I see their volume through my panel, and they'll trade a lot, like 2-3 times more than me, and then they'll stop. And then some of them don't come back. Maybe they blew up their account. Hopefully they don't. Or it's like comes in spurts. And the best thing is just slow and steady. Slow and steady always wins the race. Less risk. Again, right now I'm averaging about 1% per trade. And so, but with a 0.5 or 1% stop, you can easily do a week's worth of profits in one single trade, or more, a month's worth, depending on how you look at it. It's all about sustainability. It's all about mental. It's about sanity first. If you're not straight in your head, don't trade. If you don't have if you're psychologically, something's off, go for a swim, hang out with your family, detox from the screens, because there is an effect. It does have an effect. And that's why I'm saying, if you want to join me, Heaven on Earth, it's happening this summer. I'll be in Costa Rica this summer. I'll be probably in Nicaragua. I'm going to explore. I'm not sure about El Salvador, but I'm going to be there. Join me. There's a discount code down below. Yes, of course, it's a promotion. I have to promote myself because this is how I make a living. I trade. I do retreats. It's totally an honest living, and that's the way it goes. So I hope that you all enjoyed this. I think even if you're an investor, you can benefit from what I'm sharing here, because you can take what I'm applying and use it on the higher time frames. So again, like there's a consolidation and then a strong breakout. And I was sharing this earlier in the stream. There's a consolidation and a strong breakout. It's pointing to more upside. And that's just so the price is fractal, meaning it's repeating on all these different time frames. And so everything that I'm sharing with you on a 5 or 15-minute time frame, you can use on a daily or a weekly time frame. And once you understand, that's how you start to really unravel this mystery that is trading and price action, because it's all about looking at the candles relative to one another. It's all about being able to spot support and resistance, supply and demand. And it's not rocket science. And that's why I have my courses. That's why I create courses. It's not to make a bunch of money. Of course it supports me, but I could charge a lot more for them. It's actually to educate. It's to share. It's to help those of you that are just confused by it all and just trying to get your bearings with it, because it is a process. And depending on how committed you are, it doesn't necessarily have to take years to understand this. You could understand it in a couple of months if you really applied yourself and watched my streams and other streams. 𝐬𝐸𝐧's got some great streams. He's definitely leaning on the bearish side himself, but we've mostly been in agreement throughout this bear market. And there's other great traders out there too. It's just that, maybe you learn from me and then you learn from some others and you kind of cycle that way. And then eventually you come up with your own style and you come up with your edge, your strategies that really work for you, and you ignore everything else. So I like swing fail patterns, the over-unders, I like on different time frames, and I like breakouts. I like trying to catch breakouts. It's big wave surfing for sure, and it can, you pretty much know how the trade's going to play out in a few minutes. Usually within 5 to 10 minutes, I know whether it's a great trade or whether I'm going to maybe get stopped out. And sometimes I nail it. Sometimes I still, because you don't know. Sometimes candles can be all over the place. It's not always cut in stone, but it is. I know that it's an edge because I know that a majority of the time even if I only catch half of the moves, my R multiple is higher. Okay, so if you can aim for a 3R multiple, that's great, because with a 3R multiple, you make 10 trades. And this is also in the course, by the way. You make 10 trades. That's, if 5 of them work out, that's a 15R. If 5 of them don't work out, that's a minus 5R. Okay, assuming you set a stop loss, and maybe some of them you cut before it even gets there, but that's 15 minus 5, that's a 10R. Okay, so you make 10 trades in a month, you get a 10R. That's 10% if you're risking 1%. So doing the math, understanding how it works, if it's just a 1R trade, it's not going to work for you, because you might only get half of them right and then half of them wrong, and then you're basically back where you started again. But 2, 3R, you start going to for 4R, 5R trades. And then again, you'll get those trades. It's maybe a 5 to 10R, and you're way ahead that way. So that's how you grow. That's how you grow your trading funds. HODLing is not the way to go. I mean, it depends. Some people I know, I have some friends, and they've been HODLing Bitcoin for many years, and they're doing just fine. Of course, I have a friend, my friend used to mine it years ago, like in his house, back before it was a thing, and he mined like several Bitcoin just using some basic equipment in his house. This was years ago, but he's still holding that. He's never touched it. And of course, like if you were a pro trader, you could definitely turn that into a lot more. Like, and he actually came to me recently and said, hey, you know, I really actually wish I knew what you know, because I definitely see how there's been times where, like, okay, you're waiting from the high of 2017 to now to, you know, we were beneath this high after 3 years, right? How long was this? I mean, imagine being in that situation. You basically have to be completely detached from it and not really need it, right? But this was 1,800 days later, where, I mean, until, let's see, 1,855 days. How many years is that? Somebody do the math for me. 1,855 days, and you're basically back to where you started as a hodler, versus even if you had bought the top, the very tippity top, and you sold somewhere up here or down here, whatever, still 166% gain, and then you just held off and then bought back in here again. Okay, big difference no matter how much money you're working with. So hodling, I mean, again, the maxis say, well, at some point you just won't need to sell it because you'll be using it. But until that point comes, we don't know when that's going to happen. Until that happens, maybe not in your best interest to hodl. I don't know. I present the arguments for and against hodling in Smart Money's Crypto Handbook if you're interested in reading that. I make a pretty clear case for why trading can be beneficial, even if you're just learning how to spot tops and bottoms, or accumulation phases and distribution phases. Like, again, I think that it's quite possible that we've broken out of accumulation. And if you've spotted this, then you know that now is actually the time to buy. But we don't have confirmation of that yet. But then again, if we see what happened in 2018, there was this consolidation period. It did not break back down. It didn't retest this. It didn't do that until COVID, okay? And that was a black swan. It didn't retest. It kept going. It kept going even after this. I mean, this was how many weeks in a row? 1, 2, 3, 4, 5, 6, 7, 8 weeks of green. And you think, well, it has to pull back now. It has to at least come back. And you know how many people were waiting here for Bitcoin, myself included, to pull back to this level, even 4,400, and it didn't. It came down 4,800, but then look, what did it do after that? It went up. It went all the way up. I mean, if we count the wick, 168%. So, you know, hodling is for those that really don't care to read charts, don't really understand them. DCAing also kind of maybe in the middle there, not such a bad idea. Could prove to be a genius mode for some if we really continue to hold and break above. But trading is, you can't really go wrong understanding how price moves, because once you can read a chart like this, you can read any chart. So I hope you all enjoyed this. I know I went on a little bit longer than I expected to. It's been about an hour now. But I don't want to cover any of the alts. I wanted to focus on it on Bitcoin today. I didn't really look at Ethereum, but with Ethereum, it's a similar situation that we have on our hands here, where it did definitely at resistance. This is definitely a supply zone here. Initial rejection at 1850 or so. Now it's coming back. This was the previous week. Is this range here is what I'm working with. This is the mid at 1700. So I would want to see how Bitcoin or how Ethereum does at 1700. If it breaks back inside underneath this, then probably headed back down to 15, maybe lower than that actually, probably around 1500. If it really breaks down from here, that would make sense. That wouldn't surprise me, but I'm not really interested so much in Ethereum these days because of not as clear. The price action hasn't been as clear to me. So I like clarity. I like to know. I mean, I see clear blue sky around these consolidations. I like that in a chart. That's also why I'm not really focused so much on the alts these days. So again, I'm gonna read through some of these comments here. Probably do it after I close up shop here. Actually, let's see. Yeah, so I mean, what do you guys think? Again, after hearing both sides of the argument, what do you think? Is Balaji right? Is he crazy? Is it for attention? Is it an engagement? I mean, he's a pretty smart guy and he's pretty level-headed. Just watch the interview with Pomp, like it's pretty good. I just, he's very convincing in his argument, and he's got references. You don't usually see that. You don't see all. He went into great length with it all, but he could also be really wrong. I mean, $2 million. He's got guts to put that on the line for something like this. Yeah. Okay. Well, thank you all. I'm glad I did a live here. I just thought I'd throw it out there, do it a little different instead of just a formal video. I appreciate all your support. And again, please like the video if you watched this far. It really helps me. And have a beautiful rest of your day and weekend, and be prepared for anything, as always.